Hi viewers, welcome to the Akshaya Money Management. Today, let us see about the May 2020 market outlook. Nifty has fallen from the top almost a 38 percentage what we have seen in the March end. If we see till date, there is a May 1st market right now still we are in the minus 19 percentage. That means in a 1 month the 19% is been increase in the Nifty. This is about the how the market is recovered in a 1 month. And let us see our politics around us. Every day the government stimulus packages announcing. It may be for NBFC, it may be for the agriculture, it may be for any every sectors companies government is announcing, and we are seeing the market is reacting to that one. This I can say this 1 month why the markets are gone up because of all these stimulus packages announced by the government. And if you see oil, we are seeing all-time low below $20 per barrel. We are seeing oil coming down, and also against dollar, rupee is weakened in the current situations. So what I can say, till antidote has been found, this kind of a volatility will be there in the market. And let me tell you, this volatility is a good for the investors. So I can say in 2020 is a golden opportunity to invest in the equity markets. And regarding the monsoons, one good news for IMD forecast in this year, monsoons will be normal. So that is a good news for the equity markets. And in this pandemic, rural India has not been affected. There is a one plus point because the 65% of our Indian population is depend upon this agriculture. And let us see how the money is being flowing into the Indian markets. If you see, $70 billion is being dumped from the Japanese in Indian markets. It may be through loans or it may be any factors. And second deal what we have seen is FB, that is Facebook, deal with the Reliance. 10% of the Reliance company, Facebook is investing almost 48,000 crores. FBI is investing into the Indian markets, Facebook deal. And there's a lot of talk is happening that China is losing out a lot of industries. A lot of foreigners wants to see other countries as a investments. They are coming out of the China. So this may be the opportunity for the Indian markets. So for a foreign investors, still now they are the sellers. You can see anytime they can come back to the Indian market because today the currency, Indian currency is very attractive for the foreigners. So this is an opportunity I can say to invest it because this kind of a ups and downs we have seen in the past. If I show you 20 years of the data, there are a lot of ups and downs are there. It may be Y2K issues, or it may be 2008 or 2014. All these problems, if you see the graph, 20 years graph is a standstill, like upward direction. Whether you like it or not, next 20 years also market graph will be looking almost a similar kind of thing. So this is an opportunity where you're getting the market discounted at 20% even now. So this you should take as a opportunity and invest it. If you see, it may be world war or any kind of thing, market is bounced back in 7 to 9 months time. The market had come back to its original levels, and equity will remains as the ultimate asset class within any asset allocations. And after all this big fall, we see next 3 to 4 years will be very good for the equity markets because there are a lot of innovations comes in. If you see a Y2K problem or if you see 2008 scenarios, there are a lot of new innovations comes, so that will carry down the carry up the market. For example, today, Zoom, all meetings are happening on Zoom, Netflix, online education. These are the new innovations happen because of this pandemics. So this new generations, this new things, what market is required. So currently, what we recommend to our clients to keep 60% into equity and 40% into debt. Still, I recommend asset allocation is the most important. As you see this red line, which is the Sensex, as the Sensex goes down and down, your equity should increase. So with this proportion, we are saying 60% holding in equity is a good as of today's situation. And coming to the stocks, there are a lot of customers ask me what are the stocks for this month. So we've been continuing this from the February. So before I giving what are the stocks, let me tell you what sectors will do well and what sectors will not do well. So as you know, these are all common sense. Tourism will be a bad, hotels, real estate, automobiles, and this all leads to the finance, NBFC. These are things which will may not do well for the next 6 months to or 1 year, but which will do well. So let us see there is FMCG, power sectors, because we are in the house, we require power, telecom, we are using everyday basis telecom, and agriculture, pharma, chemicals. These are the sectors which we should have a focus. And on this basis only, I've been recommending from the February. If you see some of the customers' feedback, there's a lot of WhatsApp message we are getting it. Thanks for your love and affection. So let us see in February what we recommended 3 stocks, how it is performed. Markets is a Nifty. Nifty is gone down and it is taking a steps to reach to the top. So JP Chemicals is a what first stock which I recommended. In this fall, this particular cash-rich company is not fallen as much as Nifty is fallen. And in the 1 month, it is given 32% returns. Second, Alkemin Chemicals. Alkemin Chemicals is fallen. Maybe 50% of the Nifty, how much is fallen, but it is recovered. If you see the graph, it is gone all-time high now. Alkemin. Deepak Nitrate is it is fallen almost a similar kind of a Nifty, but it is recovered faster than the Nifty. So these are the best stocks one should hold in the portfolio. And let us come to the one of the customers had shared this his portfolio with his permission. I'm showing this one. So he started averaging every fall. He purchased at 500. After that one, every fall he started accumulating stage by stages. Sometimes he purchased 60, sometimes he purchased 100 stocks. You can see how he made the profits. The stocks which is purchased lowest, he got around 44 percentage, and the stocks which he purchased recently, he made got around 5%. So, and on average, he got 30% returns in this Deepak Nitrate. And there one more other customers who had sent it. He made in Alkemin, in similar kind of averaging method, he made around 35% returns. These are the customers who send feedbacks to us. Thank you. This all my videos are useful for you. I'm happy for that. And the next video, what we recommended, these are the HUL, which he recommended. And HUL, you see the stock, how it's run up. It has fallen, no doubt, but it is all-time high right now. These are the stocks which we recommended in the March video. And Britannia has gone again all-time high. Nestle is gone all-time high. You see the graphs. Maybe Nifty is taking a time to recover, but for this all these good stocks, it required hardly a 1 month to recover, and it has gone all-time high. These are the what we recommended in the our last video. And new stocks for this month. There's a banking sectors you should look into, because there's a HDFC Bank, which is the favorite stocks for us. and this is you are getting a much discounted price. You start accumulating this stock. And second stock will be Reliance, because you heard about the Reliance and Facebook uh, deal. So this stock may go up to 1,600 to 1,700 levels. Right now is around 1,400 levels. Reliance is there. And Pidilite, the one more chemical industry which we are joining in our portfolio. So these are the three stocks for this month where you can look for investing in a phase by phase manner. So thank you for the May edition. Look forward for the next month.